If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Ecuador's economy in the second quarter of 2024 experienced a 2.2% contraction in GDP year-on-year. But by Q1 2025, everything changed with a remarkable 3.4% growth turnaround. How did Ecuador transform from economic contraction to robust expansion in just 3 quarters? The data reveals a stunning productivity surge that's reshaping South America's economic landscape. Let's break down the numbers that tell this remarkable recovery story. The second quarter of 2024 painted a troubling picture for Ecuador's productive economy. GDP fell by 2.2% compared with Q2 2023, driven by multiple economic headwinds. Construction endured a particularly deep contraction of 17.2%, weighing heavily on investment. Sharp declines hit capital formation at -8.2%. Household consumption dropped 2.2% as consumers tightened spending. Government spending slipped by 0.6%, adding to the economic pressure. Some sectors showed resilience. Exports rose 1.9% despite the broader downturn. Imports edged up 0.2%, suggesting maintained international trade flow. Household demand fell due to weaker spending in textiles, footwear, and trade services. Government demand pulled back with reduced purchases of goods and services. The quarterly data revealed an economy under significant stress across multiple sectors. But this contraction set the stage for an unprecedented recovery story. The foundation for Ecuador's comeback was already being built in these challenging months. By late 2024, economic momentum began shifting dramatically. The quarterly GDP contraction of Q4 2024 was -0.9% year-on-year. But the first quarter of 2025 delivered a stunning rebound of +3.4% year-on-year. Quarter-on-quarter growth reached an impressive +3.46%. This rebound likely owed to recovery in consumption and investment. Improved consumption was underpinned by better credit and labor conditions. The labor market supported this turnaround significantly. Unemployment fell from 5.2% in May 2025 to 4.5% in June. This signaled improved employment and income, bolstering consumption. A tightening labor market supported household income growth. Monetary conditions remained relatively restrictive throughout this period. The benchmark lending rate held steady at 8.50%, high enough to moderate demand and inflation while supporting recovery. This level reflects tight monetary policy balancing growth and stability. Inflation was benign and falling through early 2025. After being 1.55% in 2024, inflation trends turned favorable. It dipped to 0.25% in February 2025, a low not seen since mid-2021. This ultra-low inflation supported real income growth for households. After moving up to 1.48% in June, it retreated to 0.72% in July. This inflation pattern provided ideal conditions for sustained economic expansion. On public debt, Ecuador's government debt was about 50.6% of GDP in 2024. A moderate debt burden hovering around half of GDP provided fiscal flexibility. This manageable debt level supported the government's ability to respond to economic changes. The complete picture reveals a well-coordinated economic transformation. Each indicator contributed to Ecuador's remarkable economic turnaround story. The data confirms Ecuador's successful navigation from contraction to robust growth. This timeline demonstrates the speed and effectiveness of Ecuador's economic recovery. The foundation was built on improving productivity across multiple sectors. These developments created a sustainable platform for continued growth. The Q1 2025 results exceeded expectations across virtually every major economic metric. The labor market transformation tells the most compelling story of Ecuador's recovery. From 5.2% unemployment in May to 4.5% in June 2025. This 0.7 percentage point drop in 1 month signals a rapidly tightening labor market. The speed of this employment recovery exceeded regional benchmarks and historical patterns for Ecuador. Manufacturing sectors led job creation, reversing the construction employment losses from 2024. Companies reported increased hiring confidence as economic indicators stabilized and growth resumed. Ecuador's inflation control represents a textbook case in monetary policy effectiveness. The dramatic drop from 1.55% annual inflation in 2024 to just 0.25% in February 2025. This marked the softest price rise since June 2021, creating ideal conditions for growth. The controlled inflation environment supported real wage growth and consumer purchasing power. Consumers benefited from stable prices while the economy expanded, a rare economic achievement. Ecuador's debt management demonstrates fiscal responsibility during economic recovery. At 50.6% of GDP, Ecuador maintained a sustainable debt burden below critical thresholds. This moderate debt level provided fiscal space for counter-cyclical policies during the recovery phase. Compared to regional peers, Ecuador's debt position remained manageable and growth-supportive. The fiscal framework supported recovery without compromising long-term debt sustainability. The mechanics of Ecuador's recovery reveal sophisticated economic policy coordination. The interplay between monetary policy, labor markets, and fiscal discipline created optimal conditions. The 8.50% lending rate provided the right balance, controlling inflation while not stifling investment. This monetary stance supported the dramatic inflation decline from 1.55% to 0.25%. Lower inflation and stable monetary conditions encouraged business investment, reversing the 8.2% capital formation decline. The labor market tightening from 5.2 to 4.5% unemployment provided the consumption boost needed for sustained growth. Ecuador's structural transformation addressed the specific weaknesses that caused the Q2 2024 contraction. The economy diversified away from construction dependence while maintaining export competitiveness. Export growth of 1.9% during the contraction period provided the foundation for broader recovery. Productivity improvements supported wage growth without inflationary pressure, a key success factor. Supply chain optimization and operational efficiency gains multiplied the impact of policy measures. The sustainability of Ecuador's recovery depends on maintaining this policy coordination balance. Current fundamentals suggest the recovery can be sustained with continued policy discipline. Investment in productivity and innovation will be crucial for maintaining competitive advantages. The institutional framework that enabled this recovery provides a template for sustained growth. Ecuador's transformation from -2.2% contraction to +3.4% growth represents successful economic management. Ecuador's Q2 productivity surge and subsequent growth demonstrate how coordinated economic policy can rapidly transform national economic performance. From GDP contraction to unemployment reduction, from inflation control to sustainable debt levels. The data tells a clear story of economic recovery driven by sound fundamentals and strategic policy implementation. This case study provides valuable insights for investors and policymakers monitoring emerging market recoveries. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.